Okay. So I'm recording this meeting. I just thought that everybody should know that. Now, this is a free finance class, and what we're going to be looking at is, like I mentioned, it's not a deep dive, but I can assure you that you need a paper and a sheet of a pen, I beg your pardon, and a sheet of paper to go ahead with this session. So please bring out your pens, bring out your books, and just begin to note things down, because what you're going to learn here today, if you take the things you're going to learn here today about finance, what we're going to be teaching, what we're going to be sharing, then you would really have a really good financial system for your school. Okay, so it's really important that you note things down. And I would suggest that you, on your sheet of paper, right? So let me share, I will stop sharing this now, and I will share a whiteboard, okay? Because I want you to share, I want to share a whiteboard so that everybody can see that. Now, this is the whiteboard. What I need you to do is, if this is your sheet of paper, I need you to draw a line in the middle of that sheet of paper and write old way here. Excuse my old way. And then write new considerations, because it's a consideration till you can sort it out. Okay, so new consideration, right? So just forget I write it. But that's what this is. So what's the old way, the things that you've been doing, and then what are the new considerations, things you need to begin to consider even as we go along. So I need you to draw that line in your book and date today. All right, so following from this session as well, something we're going to do is that we're going to be doing a finance challenge. It's a 15 days finance challenge. It starts, I think it starts on Tuesday, if I'm not mistaken. And every single day for 15 days, you're going to be working on almost like, it's actually for 30 days, but I give you a tip for 15 days, right? You're going to be working on your finances for that finance challenge. And it's really important because at the end of 15 days, that's each day, you will find that there's so much that has happened in your finances if you follow these tips judiciously. Okay, so I would ask that you please, if you know, I'll drop my number so that you can add me on your WhatsApp, and then you can see my WhatsApp stories, because I'll be sharing what we're going to be doing. My WhatsApp stories. I'll of course also share it on Instagram. So there'll be very short 15-second videos. I'm sorry, 15 to 30 seconds videos, just telling you what to do the challenge. Okay, that's something that is really important, right? Because it will help you, like I said, your business finance and your personal finance is what we're going to be looking at. Could you kindly mute your mic if you're not speaking? David, can you mute your mic? Thank you very much. Okay, so that's what it is. And let me explain the challenge, and I'll come back to the challenge later. But I want to just... Yeah, so I've just muted David. I don't know what's going on with that mic. Keeps coming in. Yeah, so what it is right? So imagine that we start tomorrow. Tomorrow, I'll introduce the challenge and give you one tip, okay? Next tomorrow, so if I introduce the challenge on Tuesday, for example, on Wednesday, you will have work that you need to do. I'll come back on Thursday and tell you something you need to do on Thursday again. And then on Friday, you will get it done. All right, so you're going to get a challenge every alternating day, something that you're going to be doing for at least 15 days to make sure that your business finance and your personal finance comes together really nicely. So that's how that challenge is going to run, all right? But I'm going to take off with this session now so that we don't spend all day with me, even though I would absolutely enjoy to spend my day with you. So this is finance for financial managers. We're going to be looking at what exactly is finance. How are we meant to manage our school finances, our business finances, our second business finances, let's not call it side hustle, our second business finances, how we're going to manage our personal finances. So those are the things that we're going to be looking at in this session today. That's my number. For those of you who don't have my number, please write it down and please save it in your on a phone that has WhatsApp so that you can see my WhatsApp stories. Okay, that's really important so that you can follow the challenge. Okay, so that's great. All right, so this session will, Larry and I will take this session together. I will pass the mic between us back and forth, just so that you don't hear only my voice, like I mentioned earlier. And so our focus today is budget. So how do you put together a budget? We're going to look at inflow and the planning process. So what are your inflows? And we'll look at your sources of finance, which are like your startup expenses. And then we'll look at other sources of income. Okay, your startup finances, which is your financing for your business or your personal dreams and projects, are different from income. Okay, so that's what we're going to be looking at. So that's the difference. There is income, there is your financing for your project or your business, all of those things. Okay, and of course, we're going to look at the planning process. Like I said, it's not a deep dive because we just have about 20 minutes left, but you will gain a lot. So remember that book, draw a line in the middle, old way, new considerations. And the next thing we're going to be looking at is spending process and checks. What is your spending process looking like? Is there a problem with your spending process? Maybe. All right. And then what sort of checks and balances should you have in place to ensure that you have a good financial system? And then what are the tools that you need to make sure that your financial system is working well? And then, of course, automation. Okay. So those are the things that we're going to be looking at today. All right. Now, the first things first. I like to say that, and I think it's true. It's not that I think, it is true. The way we do things and why we do things are very deeply rooted in our belief systems, okay? They're also very deeply rooted in the way we even see ourselves, the way we see money, right? Which is why sometimes somebody is owing you money. And instead of you to ask for your money, you're dancing around, you are being very skirtish, you're being really nice to the person is owing you money. Why aren't you asking for your money, right? Again, it comes from belief systems. It comes from cultural constructs that we've been exposed to. It comes from societal constructs as well, right? And so those are things that we basically need to begin to break down if we want to have a robust financial system, if we want to have a robust financial management system. So you need to begin to ask yourself, what are my thoughts about money? What are the faulty mindsets that I have concerning money? How do I break it down? All right, so things, for example, like spending money on yourself. There's nothing wrong with spending money on yourself. It just means that for you to spend money on yourself, you need to plan it. You can't sit down and just spend money anyhow. No, it's not done like that. Because guess what? You have a business. Beyond your business, you have people who are depending on you. So if you're just sitting down and you're just spending money without saving, without thought, then you will run into problems somewhere down the line, which is why you need to have a good mindset about money, all right? You shouldn't let money be your control mechanism. Money is a tool. It's a tool to get things done, right? And so I really need to talk about this because it's important that you know exactly how to use money and you confront the faulty mindsets that you have about money. If you break them down, then it's easier for you to then have a really good relationship with money and managing money. Another really faulty mindset is, when I grew up, I didn't have a lot of money. So now that I finally have money, I'm going to spend it. That, again, is a faulty mindset about money. Because guess what? Like I said, money is a tool, and tools get bad. Tools have the optimum lifetimes, right? So if you look at it and say, oh, you know what, because I was grown up, I didn't have money. Now that I have money, let me just be buying everything that I want, eating everything that I want. Is that really the right mindset about money? It is not, which is why maybe you have a business and your business is running well, but then maybe there's something you're supposed to take from the money, the income you're gaining, and put back in the business. But no, you're saying to yourself, finally, money don't touch my hand. Oh yeah, make me chop and finish. If you chop and finish today, what are you going to spend tomorrow? Do you understand? So all of these things are really important when you begin to think about money and think about how you're using money, think about how you manage money in your organization. Another problem that I find, another faulty mindset that I find that we have with money is, you know what? I will pay you, so just wait for me. And that has to do with when you are an employer or a founder and you're not treating your people with respect in terms of paying them. Now, I do know that sometimes it's difficult to manage all of your financial obligations, but as long as they are a financial obligation, then guess what? You have to meet it. If you cannot meet it, then you need to let people understand why you cannot meet it. So it means that you must be respectful of your financial obligations. That's another mindset that you need to develop with respect to money. Okay, so like I said, I really wanted us to look at the belief systems that govern how we relate with money, how we think about money, how we spend money, how we use money, how we even think that we are deserving of having money. Okay, so all of those things are really important. I wanted us to get that out of the way before we moved forward. Remember, if you have any questions questions, please drop it in the chat box. And when it is time for us to take questions, we will respond to them. But if it's a really urgent question and I find that it directly relates to what we're talking about and might impede understanding, I will respond to the question. Or Mr. Lanray, who is on this Zoom call, will respond to the question. I found this picture on Google and I found it really interesting, right? Because it's so important for us to look at all these elements. The first element that you have, and I'll just use my annotator here. This here, pardon, I need the spotlight. This here, right, is money. So how much money is coming to you? Where is it coming from? You know, this is really important. And that's like the start point of everything. Where is that money? How much money is coming to you? And then we go to the next one. It's not, it doesn't follow, okay? So it's not like one before the other, but I like to start with where is that money coming from and what is this money? And you need to understand that sometimes money is not fiat. It's not 1,000 naira that I collect from Jenina. No, it's not. Sorry, Jemima. It's not. It could be the fact that I can call Jemima and say, oh, you know what, Jemima, I have a training session. I need you to please come for the training session. I can't pay you for it, but I would be able to do something for you in the future if you did this for me for free for this session. That in a sense is money, because guess what? Money is a tool. It's a means of exchange. So when you begin to understand that, you begin to realize that your business is not doing well, not because of fiat, it's the 500 naira, 1,000 naira. No, it's because even your social currencies have a problem. Okay, so that's another money mindset that we need to break. It's not about that fiat, that 500 naira, that money in your account. No, it's much more than that. How much goodwill do you have towards people? Do you towards you as well? That's something that is important, and that's something that you need to cultivate. Okay, so that's the first thing that we're looking at. What is money? Where is this money coming from? And then we're looking at your spending patterns. How are you spending this money? Okay, who are you spending the money with? What are the tools that you're using to spend money? And so that's why we're looking at the phone, and of course we're looking at your ATM cards, right? And then we're looking at how much money do you have on hand, which is your cash flow, right? Your cash flow is basically in your wallet. It's money in your wallet. You actually be spending, but you have to spend. So if I want that money to spend, that's cash flow. So we're going to be looking at that as well. And then of course this piggy here is your savings. So what savings do you have? Do you even have savings at all? What mindset do you have concerning saving? Is it sera? Money is here today, it goes tomorrow. You know what? I don't need to save money. Is that your mindset regarding savings? That's another thing that you need to be thinking about, right? And then we'll come to documentation, right? What are the tools that you're using to document the money coming in, the money you're saving, the money you're spending, where you're spending it, how you're spending it, how liquid you are, which again is your cash flow statement, and then of course, how you're basically allocating that money. So that's the tool that we're going to be looking at. And that's something that is extremely important in financial management, okay? So you need to actually be asking yourself these questions. Now, remember that your notebook, okay, in that your notebook, I need you to write, where is my money coming from? Okay, it's really important that in your notebook, write it down. Where is my money coming from? What are the different sources of money that I have? And not just fiat. Remember, I said that, right? Not just fiat. There are people who can say, oh, okay, I need you to do this thing for me. And they won't even think about the fact that they need to pay me money. Because they know that I'm not necessarily going to take money from them for doing that thing. Why? Because I can call them tomorrow as well, and they will answer me. Right? So where are the sources of money that you have? Of course, if you have a business, you need to write your business as a source of money. If you have people, then you need to write people as well as your source of money. You need to also write, maybe it's another business, which is where you're looking at collaborations, right? So those are things that you need to write. And the second thing, which links directly to your ATM card, is how are you spending this money? Right, that's another thing you need to ask. But my money, where is my money going? How am I spending it? Where am I spending it? When am I spending it? Because that's also very important, right? Because sometimes you don't run into money problems because you spend money wrong. You spend too much money. No, it's that the time you spend the money is the wrong time because of your cash flow. Okay, and we'll get to that. All right, and then of course you're looking at this wallet. This wallet is your cash flow. Do you have a cash flow statement? Tells you exactly what money comes in at what month and what money should be spent at what month, of course, and that is derivative from your budget. We'll go into budgets. We haven't talked about budget. So don't come in and say, I missed something. No, we haven't talked about it yet. We're just in the second or third slide. And then, of course, we're looking at your savings. Do you have savings? Where are you saving this money? Do you have investment opportunities that you're taking advantage of now, right? Those are questions that you need to begin to ask yourself. And then finally, the last question you should ask yourself and you should write in your notebook is, what are the tools I am using to track my finances? You know, how am I raising those invoices? When those invoices are paid, do I know that the money has been paid? Where do I note it down? Right? All of those things are stuff that you need to be using. And when I talk about tools, it doesn't have to be something frightfully expensive. And I will share on this call, towards the end of this call, I will share some apps, which some of you know, right? And I really expect us to have a really nice interactive session. So if there are apps that you use, feel free to share things that on the go, you can track your money and know exactly where it is going. And remember, it's not just about you. How about the person in your business who is also one of your money managers? That's something that we're going to also be looking at today on this call. And welcome to everybody who has just come in. We're looking at finance, and we talked about the areas in which we're going to look at it, the inflow, the process of inflow, outflow, the spending process, spending patterns, and of course, where does this extra money come from, and what are those things that take away from the money, right? Why we don't see it anymore. And then we looked at what exactly is money. Are we talking naira, kobo, 1,000 naira, 5,000 naira, or are we looking at more of like a social money, right? Which is like social capital. That's something that we also looked at. Right? And then, of course, we looked at the tools and the apps and the documentation and the people process of that money. Those are things that we're going to be looking at today. Now, we're looking at the source of finance. And for any business, you have a source of finance, yeah, right? To start your business, your money came from somewhere. Where did it come from? Are you bootstrapping? Like me, for example, I'm bootstrapping. Most of the, like 90%, 95% of my business is based on personal finance, right? I didn't go to any bank to get a loan, but if you did go to bank to get a loan, then that means that the money didn't come from you, it's not from you, right? So it means it came from somebody, and that money is going to go back to that person. So it's really important, and those are under startup expenses, right? So that's what sources of finance looks at. We're looking at sources of finance under your startup expenses. I'm starting this business. What money do I need? I need money. So what exactly is the money that you're going to use to start this business? Okay, that is what we're looking at under sources of finance, right? And like I said, it's either it is you that brought that money or you borrowed the money. Now, if you borrowed the money, is it long-term or short-term? Why am I asking this question? I'm asking this question because that like directly impacts your, to be honest with you, whether it's short term, whether it's long term, whether it's whatever term, it's a direct impact on your bottom line, because you're going to pay, can you please mute your mic? Thank you so much. Because you're going to pay interest. Yeah, every single time that you got money from somebody else, you're going to be paying some form of interest on that money. Right, which is one of the reasons why you also need to understand if it's a long-term or a short-term loan. And that is one of the reasons why at the beginning we talked about what you're financing. How are you spending that money? How are you saving that money? Where are you spending it? At what time are you spending it? And that's why having a cash flow, a functional cash flow, not a budget. A budget is great. That is at the beginning. I'm going to start this term, this is how much I have to spend, you write that budget down, right? And then based on the budget, you begin to then break it down into quarter one. Under quarter one, you have January, February, March. Quarter two, April, May, June, you break down into quarters. You then break each month, each quarter into months, and each month into weeks. And that's how you actually plan your cash flow statement, because that's how you know that you are keeping on top of the money management system. Okay, so those are the things that I wanted us to look at in terms of your financing. And we'll come to this a little later, because guess what? When we get into documentation and spending the money, we're going to come back to your ownership, especially if you borrowed the money to start up. Okay. So where is that extra income coming from? We've looked at your startup expenses, how you started your business, and how you started your business is extremely important, right? Because like I said, it's a tool for you to use to distribute. It's a money distribution tool. If you started your business on borrowed funds, you're going to have to pay back those funds. You have capital, you have interest. Even if you have a moratorium on capital payments, you don't get moratorium on interest, except they started doing it, but I'm not aware that they do. So you must plan your cash flow and have that money that you borrowed inside that cash flow. so that you're sure that you can pay that money and then it doesn't become a problem for you later. All right. And so extra money, is there really anything like extra money in a business? There is if you have savings. However, extra money, which is different from your financing, becomes the income in your business, right? What is the income that you have in your business? Where does this income come from? And if you check the different sources of income that you have, it could either be the money that is coming into your business. I did write that down here. So for example, if you have a school, right? School fees are what? Tuition is money coming directly into your business. I didn't bother to write that here because your business is in business to make money, right? So that major income that your business will always attract, regardless of whether or not you're doing anything extra, is always on the table. But I'm looking at the extra income, okay? And where is it coming from? Your extra income can come from new products or services. A lot of times we look at our businesses and we don't realize that there's something extra that we can be doing. So what I need you to do in your notebook is write it down again and say, I have this money that is coming in, normal, month in, month out. This money comes in because I'm in business, right? But what extra do I have? So I need you to begin to take apart your services and say, what else can I do? And in taking apart your services, you need to begin to ask yourself and maybe your team, what questions do people ask concerning us? What sort of things are they asking us for? All the time, and we have to point them to another person. I need you to begin to take note of that, all right? Because that could potentially be a second business for you. Yeah, you have other businesses, either as an offshoot of a direct offshoot of your current business. Maybe, for example, you open another location as a direct offshoot. Or it could be that like it's the same business right there, or it could be another one. You're moving horizontally into a service that may or may not necessarily link back to your business directly. So that's something that you need to write down and ask yourself, what other service or product can I have that can attract more income for us? Okay, that's something that is extremely important for you to know. Write it down and begin to ask those questions. What is this question that people are always asking us? You know, if it's a school, for example, if you're a consultant, for example, what are other things that people say, oh, can you do this for me? You know, even if you're not a consultant, if somebody keeps asking you that and saying, oh, do you guys do this in your school? Do you do this in your business? How many times are people asking that question? Is it viable? Is it enough to move you to a space where you seriously begin to consider it as a new service or a new product? Do you want to maybe run a trial? But that's not what we're talking about today. Okay. We're not going to talk about that today. That's something that you need to begin to think about. All right. We're going to have a session like this about can you kindly mute your mic as you come in, please? Thank you so much. Thank you. Kindly mute your mics. Thank you. Thank you so much. Yeah. We're going to have another session, which is why I really wanted people to register via the email. And a few people did, and I want to say thank you for that. But if you didn't register via the email, then I need you to please put your email in the chat box because it's really important so that you can be updated, especially because some of you are not on any of my social networks. You're not on Instagram with me. You're not, maybe you don't have my WhatsApp number. So it's really difficult for you to connect with me outside of maybe groups, educational groups where we both, we're both in the same group, right? And we're going to have another session like this, a free session as well on marketing and customer services, right? And that marketing means taking things out there. And then we're going to look at new products and new services and stuff like that, right? So that's why it's great for me to have your details so I can add you to my mailing list, okay? Another thing that you're looking at is new markets, right? And that is, like I said before, an extension of the current service. So I'm going to go and open up another school in another location. That's taking your current business into a new market. That's another way that you can make extra income. And then, of course, income comes from savings as well, but not just putting the money in savings and getting a fixed accrued amount, but looking at investment opportunities. But first, you must even have the money that you put in savings. And as we go on in this session, I'm trying to be quick because I did promise that we're not going to be here for a long time. But I'll try and keep it really short, right? So you're going to be looking at your savings and how do you save? Where do you save? What do you save? And let me say something very quickly about savings, right? Personally, if I want to go to markets and I have 15 naira to go to markets, if I go to market with 15 naira, I will spend 15 naira in the market. But guess what? If I decide that, or maybe I forgot, instead of taking 15 naira cash, I took 30 naira cash and I left 20 naira at home. Do you know what will happen? I will still buy things with that 30 naira. 30 naira, and it would work for me, right? So it's not necessarily that I would lose out some things. No, I would just scrimp on a few things, right? A few things that I might have had, but extra to use later, I won't do that. I will buy exactly what I need right now. And what do? That 20 naira, I can save it. Because sometimes you don't have patient capital. That capital that you can just keep somewhere and come back to later. You don't have it. So why am I spending it on goods and services, on products that I do not need right now? That's a bad financial culture. Don't buy it if you don't need it, except for things that you generally need to buy in bulk because you are buying it and then you will need it. But if it is maybe I will need it, don't buy it. What do you mean maybe? Go and buy it then. And then can you please just be more mindful with how you spend money, and then maybe realize that you don't really need it, right? So what I'm trying to say is there's always opportunity for you to save. If you make 15 naira every month, take out, even if it is 5 naira, 10%, 15% of that money, 5% of that money, keep it aside. You will be shocked at how much you will be able to rearrange your finances by, and the fact that because you have deliberately taken away savings, you will save it. So write in your notebook, I need to save. Please write that down and commit to an amount every month that you're going, and it can be a percentage. You might choose to use a percentage of your inflow to make it easy for you, but commit to saving. And then we're looking at investments. Like I said, investment is inflow from your savings, but you can also invest yourself as a social capital. This I'm doing today, having this free finance session, it's a social investment, right? If I call any of you guys tomorrow and say, oh, I need a bit of help, you guys might be willing to listen to me, because guess what? I've just spent 30, 40 minutes of my time teaching you something absolutely free. Okay, so that's an investment that you need to be thinking about. And then franchising. Is there somebody in another state that maybe you can sell a franchise to, or get them into your franchise and to take your school or your business as a franchise to that state? That's another way that you can be making money. And then you sit down and draw a financial agreement with them. A lot of times, right, as businesses, we're fixed with growing in one location. And that in itself is not a really good thing, because sometimes the amount of growth that you can have in a particular location is limited. And so you need to be asking yourself, do I really need to only stay in this location? Or is there another location I can go to and expand? And that brings what? Ultimately, it brings in a bit of inflow. True or false? True. All right, so begin to think like that. Now let's move on. Now, how does the money go? Yeah, wow, does that inflow go, right? And I would like to budgeting and tracking expenses after I finish with this particular slide. Now, somewhere your money goes is your operational expenses. Your money also goes into your capital spending. Operations are, you will buy tissue, you will buy telephone, monies that you spend every week, cumulative to every month, cumulative to every term, cumulative to every year. That is your operational expense. Whether you like it or not, you must spend it. That's an operational expense. And then, of course, you have capital spending. Capital spending are your big deals, you know, your babake of spending. That's stuff like your rent is capital. Stuff like maybe you need to buy a gen is capital. You need to buy a new bus. You need to buy a new sewing machine. Those are capital expenses, and they must be planned. Okay, so you don't just wake up and just say, let's go and buy it, all right? So it must be planned, except of course you have savings and it is urgent. And when we go further down, and I will try and be really quick, as we go further down, you will get into the space where we begin to look at the money management matrix, okay? And when we get in there, you begin to group your expenses. Now, these are some of the things that we're going to do in our challenge. Remember, we have a 15 days financial challenge, okay? It's 15 days. Every day for 15 days, alternating, I will tell you, I'll give you guys a challenge, and you would that challenge and basically run with it. Okay, so those are the challenge. That's what we're going to do. And then we're looking at your discount. Somebody has 3 children, 4 children, 5 children. Let's give a discount. Did you plan to give that discount? Or somebody has bought plenty things from you. You sell books, for example. The person bought 10 books. So let's give a discount on books. Did you plan it? I'm not saying it's wrong. I'm just asking a question. Did you plan it? You don't know that when you are giving discounts, it's directly chopping from the money that you're supposed to, it's called your bottom line. And that's and your savings that you're chopping off. I'm not saying don't give a discount. I'm saying plan for it. Okay, and as Larry comes, he's going to talk to you about your budgeting and about how you can even plan your discounts into your budgets. Because it's important, right? If you're not planning business spending it, except your salary, if your salary is spending anyway, that's what we're going to go into. Then of course, late fees payment or late money payment or any late payment at all is also something that you're losing. You're losing money every single time you. Sorry guys, let me just mute everybody up on entry so that we don't have this really loud. So just give me a minute, guys, and I'll do that. All right, thanks so much. For those who are the co-hosts, you may unmute yourself, of course, after the time when it's time for you to speak. Okay, so your late fees payment. Let me tell you what happens with payments. When you look at the cash flow, right, you expect certain money to come in at certain times. If that money doesn't come in when you're expecting it to come in, do you know what happens? The spending you're supposed to spend, it's almost like you're going to borrow money to spend that money. And we know that once you borrow money, what is happening? There's a cost attached to it. You might be borrowing money from yourself, but there's a cost attached to it because there's a time later on where you're supposed to spend something where you can't. So that's the problem with late fees payment. That's why it's not okay for you to just sit down and cross your arms and say, oh, let them pay. They will pay late. That's how they pay. No. How do you make them not pay late? It's a question you should be asking yourself. And then, of course, on plan expenses. Hey, this used to happen to me a lot. I would go to one shop, see one nice new material. I will buy it. I will buy it. But if I don't see it in the shop when I go tomorrow. But I've forgotten that it's not a planned expense. And what has happened is that I've bought something that potentially is not useful. Is it great? Yes, it's fantastic. Do I have to buy it at that time? No. So it is not only that it is not urgent, it is also not particularly important to my operations at that time. So that's a waste. So write it down. I will minimize my unplanned expenses. And that's something that we're also going to do in the 15 days finance challenge. So just hold on till the end to get the details about that finance challenge. I'm sure you guys will love it. So I'm going to take Larry. Larry is going to come up now and is going to talk to us about tracking it. Because if you're not tracking your expenses, right, then you don't know where it's going and it will go unnoticed without you even realizing that it's gone. And that's why you need to have a budget and you need to have a cash flow statement. So I'm basically going to hand over to Larry for a very few short minutes and he's going to talk to us about budgeting and why you need to have a budget, how to start your budget, and basically, you know, just shut. Larry, please take it away.
Yes, ma'am. Good evening, everybody. Okay, so my name is Ajayi and I will take you on budgeting and cash flow. Okay, so a budget is a planned you planning your finances, okay, how your spendings and your expenses. So you come on and say, okay, at the beginning of every year, I'm planning my statement. How much am I going to spend? How much am I going to make for that year or for that month? Okay, so like I normally advise, I always say it's good to plan for a whole year. Okay, so if you're a business owner, probably a school, or be it what's called you own other businesses, it's always good to plan for that year. Okay, so for that year, you break it down into, you can start to do monthly, you can start to do quarterly. It depends on how you want to structure it. Okay, but it's always good to have a 1 year what's called budget and break down that 1 year budget into a monthly budget. Okay, so like I said, your budget is made up of your income and your expenses. So you sit down and say, okay, how much am I making? Those are your incomes. What is bringing money for me? Okay, those are your incomes. And how much am I going to spend out of this income that's coming? Those are your expenses. Okay, and we all know expenses are made up of two. We have your fixed expense and your flexible expenses. Your flexible are the ones that changes. Okay, they change according to what? To probably to time or to requirements. While your fixed are stable, they don't change. For example, your rent is fixed. Okay, except your landlord decides to change. Okay, what else? The other things are fixed, but your flexible are probably your Wi-Fi subscription and all those things are your flexible expenses. Okay, so if you're planning your budget, you have a budget. You have your income, your expenses. You are doing your income, your expenses against your income, and you must know that if you're planning your budget, you must be sure to plan against what having a deficit budget. Okay, so you are looking at your expenses and say, how can I, if you plan your budget and you see that your expenses are more than your income, then it's time for you to now say, okay, do I need to get more income or open more channels of income, or do I need to reduce my expenses? Okay, so on a daily, you should plan your budget based on what, on past data. So it's always good to have past records, work based on your data. Okay, so you know what you spent last year, you know how much you spent, you know how much came in last year. For this year again, you are planning based on that data, but all you add what, a markup to your figures. Okay, so for every expense, let's say you plan for bus or for transportation or for utilities, you're adding what, a markup to those what expense, just in case of what, of unforeseen circumstances. Okay, the price at which you bought maybe a spare part for your bus last year might not be the same price for this year. It might change, so you need to plan for all those what's called all those changes. Okay, and for your income again, you are planning, okay, for example, if you own a school, you definitely want to grow, isn't it? So the number of students you had last term should probably, or last year, would not be the same number of students you have this year. Some might go, some might come in. Okay, so what I always do is, for me, I'll talk based on from my own perspective. I always add probably 3 or 4 what's called new intakes to my budget, so that just in case, okay, we always plan to go, but just in case your student don't come in, you know that, or probably some would go, you know that at least you've added what, 3 or 4 new intakes to it, which will push your income a little bit higher. But you are not working based on that 4 you added, you are still working based on what you ended last year with. Okay, so always have that at the back of your mind. And also, when you're planning your expenses, you also like Mr. K mentioned, those things that take out your expense, your income, like discounts. How do you plan for discounts? Okay, so out of your total income that comes in, you plan, you take out probably, like, you can say, okay, I'll take out maybe 5% or 3% out of that as discounts. Okay, so you know that, let's say for example, 4 million came in. Okay, and you're taking out maybe, let's say, 5%, which is like 200,000 for income, for discount. You know that when you're giving discount to your children, or to your customers, you are working based on what, on that total discount you have planned, or you have budgeted for. Okay, anything that takes you out of that discount will definitely affect what income, okay, or your profit, or your profit at the end of that year, or for that month. Okay, so you always need to work. That's the essence of a budget. That's what a budget does for you. It puts you in line. Okay, it serves as a check on, okay, this is what I'm spending, this is what is coming in. Now, how do you track what is coming in, or how do you track what you are spending? That's where a cash flow statement comes in. Okay, like I always say, income is different from what, you might have income. That doesn't mean you are okay. That doesn't mean your business is financially stable. Okay, it's until when you have a good cash flow that you know that, yes, my business is financially stable. Your income, like I said, is made up of what, of everything that is coming in. You've planned, you've said, okay, these are the things that are coming in. Okay, your part of that is what is your debtor. Your debtor is part of what, your income. For example, you sent out those invoices for what, to your customers. The money has not come in yet. Okay, so you can count that as what, as income, but not as what, as profit, not as what, as cash. Okay, so your cash is what you have in hand, and what you have in your bank that can easily what, take and use to run your business. Okay, it doesn't include your debtors. Okay, it doesn't include the invoices you've sent out, which payment has not come in for. Okay, so when you are preparing your financial statement and you prepare an income and expenditure account, it doesn't show that your business is financially stable until you prepare what, a cash flow statement. Okay, so a cash flow statement will guide you and tell you that, oh, this is what. Also, your cash flow is done every week. Okay, I always advise you to do it every week. So every week you're breaking down to what, into every month, and you're breaking down into what, into weekly, or so the weekly is broken down into daily daily side, okay, daily cash flow statements. Okay, so every day okay, for today this is what has come in, for this is what has gone out. Okay, so as I was saying, your cash flow, it shows you that, yes, I'm financially what's it called, stable. Okay, I'm financially stable, or I'm not financially stable. Okay, so you do your income, your cash flow, you record your cash flow as it comes in, and your expenses are not as it was goes out. Okay, so that's just what's called a brief summary of how to prepare a budget and how to track your expenses that would reflect on your budget. If you made a deficit budget, or you're making a good budget. Thank you. Okay, okay.
Yeah, thank you. Yeah, thank you so much for that, Larry. So guys, that's basically where you're looking at your budget and how to track your expenses. Remember, in the slide before this one, we talked about the fact that if you're not tracking it, then it's going unnoticed, right? That money is going to places that you don't even know it's going. And you can see the speed at which, although it's a car, but imagine that it's money. And that's your money that is just flying away right there. So you want to track that money. You want to know where that money is going, all right? So, and the tools for this, which I mentioned that I was going to share. All right, so this is basically some of the things that Larry was talking about, the tracking system, okay? And then when are you supposed to track your money? Every day, quarter one, quarter two, quarter three, quarter four. You track it every single time. You check for your inflow, you check for your outflow, and you do a spending analysis, because that's when you realize, do I have a gap or don't I have a gap? Okay. And then the how, tools of financial management. Larry has talked a bit more. So one thing that I say to people is, if you're just starting a business, you don't necessarily need to invest. And honestly, even if you're not just starting a business, don't over invest in one huge tool, all right, financial management tool. Excel is okay. Honestly, it's very okay. The same way you're going to drop in money into there's no financial tools that you get, right? No matter how fantastic it is, it cannot record the money by itself. You or somebody is still going to plug that money in. So why can't you do it with Excel? Just invest your time, invest some money in a good Excel training, right? And you can do it on YouTube for free. You can do it on Coursera for free. There are a lot of these free trainings, and you'll be shocked with what you can do with Excel. The stuff that I do with Excel is stuff of dreams, because I don't want to spend that, I can't spend that money somewhere else. Okay, there are also some tools. There's budgets which you can use. Before we go on, I'll drop them in the chat box, to be honest. I'll drop some tools that you can use as well. And if you go on your app store, your iPhone, anywhere, Android or iPhone, and just tap finance or money, it will bring out a lot of tools for you, and you can use that in tracking your financing and tracking your payments. Of course, another really important thing that you need to begin to look at is automation. How do I automate things? How do I make it not particularly dependent on me, such that if I'm not there, this money can flow. I can keep doing what I'm doing. The money can keep coming in. So for example, we have, and I'm sure you guys have heard of Paystack and Flutterwave. These are tools that you can use for automating payments, right? You can. And so if you have an online school, for example, anybody anywhere in the world can hook up with you just by using any of those automation tools. So you're not limiting yourself or limiting your business to just one particular demographics or one particular location. No, it can be anywhere, anybody, anywhere in the world. All right. And then of course, there must be somebody who is actually tracking these things. It can be you. And to be honest with you, when you just start your business, it doesn't necessarily mean that you're going to have to hire everybody in the world. No, for years, I tracked my finances. I tracked every single inflow, which is why I can talk about finance like this, because I tracked it and I looked for ways to make it easy for me to make this work. I looked for ways to save money, right? So that was something, and there are a lot of you who are exactly on this table where I am. Right? You're tracking it by yourself. You need to have a function keeper. You need to have a process surrounding your financial management. It's extremely important to do that. And like I said, it doesn't necessarily have to be somebody else. It could be you, but there needs to be function of finance. There needs to be that financial function. It's extremely important. Now, before we go on to the next part, which is steps in financial planning, I wanted to quickly take some time to look at personal finance, because I do know that I have some people here who may not necessarily have a business, but they're looking at themselves and saying, how do I take care of my personal finance. I spend too much money. Anybody that asks me for money, I give them. The first thing you need to look at is your income. Where is your money coming from? Okay, and you will do a matrix. There's this, so let me do it very quickly with the whiteboard here, and it's something that I do, and it has helped me immensely in the past, I think 2 years. Yeah, it has taken, it's just in the past 2 years that I know that I've really spent some time on my personal finance. So we're doing this earlier when we're talking about using your notebooks. So I'm just going to take this out. Sorry guys, I'll take this out soon just so that we can go with that. In terms of your personal finance, I want to show you a matrix that I use. There's one that I have on the slides, but that one deals mostly with income, you know, so it deals with business, but I wanted to do one for personal finance. So if you have for personal finance, right, have this 4, again, it's always 4, right? And what I need you to do on the different boxes in the different quadrants, so this is a quadrant, right? So ask yourself, you need to have things like your rent, okay? So rent and feeding and transportation. So rent, feeding, transportation, 1 quadrant. Second quadrant, do savings. Third quadrant, do, so this one is extra. This last one is extra. So when you've looked at your rent, your feeding, and your transportation, you look at your savings. Okay, that's really important. And then you look at your things like sending money to your mom. So mom, dad, things like that go in this quadrant. Training or development, self-development goes here for me, right? And so I allocate it like this. I have my savings, I take away my savings. I have my rent, my feeding, and my expenses. This is a chunk of the money, so it is not equally. So this is like 5% that is left. My savings is about 20%. And then my rent and this, you know, so that's how I actually split up my spending in terms of personal finance. That's what I do with myself. So you need to find a quadrant that works for you. Based on the quadrant that works for you, you can then allocate your finances like that, or your extra should not be more than 5%. Your extra is what you can give. Maybe somebody comes and says, oh, I need money, please dash me. You can say, oh, no, take this 1,000 naira. You need to plan for every single money that you spend, okay? If you're not tracking it, then it's going to be going away and you will not know how it is going, all right? So that's for your spending patterns. And then I've talked about your savings as well. And so under your savings and your investments, they're kind of in the same quadrant, okay? And then your protection are things like maybe you need to pay for VPN or things like that, or you need to pay for, you know, those are what you look at for protection. And how do you also protect your finances, okay? So are you putting it in a bank or under your pillow? You know, those sorts of things are what you want to begin to think about, all right? For your personal finances. Now, these are your steps. These are the 8. Sorry, it's supposed to be 8 steps. I made a mistake here. So this number 7 is actually number 8. Just ignore it. These are the 8 steps of financial planning. The first one is to have a goal. All right, what is your target? Where I am, where do I want to go? How do I want to do it? You must, every single time that you start a business, you don't just wake up and spend money. No, you must plan for it. There must be that one thing that you want to do. 2 things, 3 things, write them down. And then you need to activate the business language and put a price on it. How much am I going to spend on this thing? If you cannot determine how much you're going to spend on it, don't spend it. Okay, don't spend it. It means that it is not urgent and it is not important. It's nice to have. And if it is nice to have, then you must not necessarily spend money on it. Okay, so that's really important. The third step is that you need to organize and prioritize. If you have more than one thing, for example, which usually is the case, organize them and prioritize them. When can we do this? Which one should come first? How should I do this? You know, so organize it, organize that spending. Why? So that you can track it. And if you need to redo that entire exercise, maybe you're starting up a new business in a new location, because you already have the money and how you spent it in one location, it's really relatively easier for you to do what? To start up in another location, because it's documented, which is why you need to organize and prioritize. And then step 4, you need to determine what goes into the dream, right? How much am I going to spend on each part? And this takes us to this place, right? So in your money generally, you need to have your savings, your operations, your capital expenses and repairs, and your miscellaneous. And I'm going to take you to another matrix, this one. Okay, there's the urgent and important. There's the not urgent, but it is important. There's the not important, but it is urgent. It is not necessarily important, but it is something that you need to do urgently. And then there's the one that is just, it's not urgent, it's not important. All right, so you need to be able to put your money into those blocks, okay? Especially when you have budgeted that money. And then what's step 5? Step 5 takes you to your statement of account. Yes. What's the money saying? What's the account? What's the grammar the account is speaking? Right? If your account is not speaking grammar that aligns with that dream, that goal, or that target, then you cannot do it. You can't, except you want to what? Increase your inflow sources. Or what? Look for alternate sources. Understanding that at the beginning, I let you know every single time you go and look for an alternate source of income, there is a price to pay. Right? And if you're okay with the price to pay and there's justification for it, then go for it. All right, but if it is not, then maybe you want to step back and say, can I take a second look at this and maybe increase my inflow such that I have money that I can spend on this thing? Those are decisions that you need to take. Those are things that you need to begin to think about, all right? But it flows from where? You understanding what you have, what's your reality, okay? And remember, it's not just about money, cheng cheng. You can also look at what your social capital, your goodwill, and see how you can begin to leverage that or increase that, all right? And then step 6, we then do a budget review, right? Because when you plan step 1 to 4, and then you look at step 5, your financial statement, you go back and say, you know what, this budget that I did is not going to work. So maybe this project, I can have phase 1, phase 2, phase 3, phase 100, if possible, right? Because there's some projects that you just have to do. But do you have to do it all at once? Is usually my question to a lot of my clients. Must you do it all at once? And usually the answer is no. So sit down and let's reprioritize those goals. Let's move things around and say, how can we do this? How can we make it work with what we have? Plus all the other money that needs to be spent. Okay, and then in step 7, you begin to look at what exactly do I need to do. Okay, and step 7 is right here, guys. If you're looking for it, let me get my annotator. Yeah, so this is step 7. What exactly do you need to do to meet those goals? So that's breakdown of your action plan and the monetary implications, yeah, the monetary allowances for each of those goals, and that needs to feed directly into your cash flow so that you can see how it flows. Okay, remember this, let me show it to you. Let me go back. This one, yeah, you have to have your step 1. You need to have how it's going to go, right? And you must map it. And step 2 says, based on financial process mapping, create that process. You need to be able to see that process very clearly in monetary terms. And then we go to step 8. Step 8 is what? Implement, monitor, review, adjust, and then maybe you might need to go over the steps again. All right, so that's what you do with that. We talked about this already. And then we talk about starting. The first thing is to assess your current situation. Where am I with respect to this thing I want to do, okay? And then you must have your personal financial goals. And then what do I need to do right now? And how can I begin to do it? So these are specific things. So you assess it, you look at the goals. Okay, this is my financial situation. These are my goals. These are the things that I can begin to do right now. Is there something else maybe I can do? That's number 4, evaluating alternatives, okay? And then you then create a plan that works with the budget and the goals. If not, then you're doing something extra which you cannot finance, okay? And then of course number 6 says that you review and revise. All right, and we've looked at this metrics already. It's on Google really, so you can take it and allocate it for yourself. Okay, and I would like to, we're drawing to the end of this session now, but my question to you right now is, what are your money goals? And remember, I talked about a finance challenge. It's a 15 days finance challenge. So if I start the finance challenge tomorrow I would do a quick video and tell you something you need to do. You need to get that thing done next tomorrow. So if I give you the tip on Monday, on Tuesday, you need to do it. On Wednesday, I'll be back with a new tip for you. Okay, something you need to do. It's a specific action that you need to take in your business with respect to your money. All right, and that's how it goes like that. So every alternate day, I come and give you a task to do. It can be a message on my WhatsApp status, it can be on my Instagram page, on my Instagram story. It's going to be something that tells you what needs to be done, such that you can keep doing it. And at the end of 30 days, even though it's a 15-day challenge, because I only spend 15 days in giving you those things, so you're going to do 15 things in 30 days, okay? That's why it's a 15 days challenge. All right, so it's something that is extremely important, but I can promise you that it will help your business. And the next step is, what do you need to change? Every time, if you've read Atomic Habits, you need to read it. If you haven't read it, if you need it, let me know in the comment section, and I will put your email in the comment section if you need to read it, or buy it off Amazon, okay? And read it. Atomic Habits is a good book. It simply says, what is that one thing that you need to change? It's not about the big goals. It's not about all the things you need to do. No, it's that one thing that you will do consistently. That is what it is. And once you do it consistently, you find that if you change 1% every day, you have changed by 37% by the end of the year, because you changed 1% every day. And that's immense, immense. So in anything you want to do, be it financial, be it health-wise, anything, once every day, you change one thing consistently, at the end of the year, you would have been 37% better than where you are right now. So that's something that I need you to do. Now, this session was free, but if you want to go into a deep dive, I do have another session. It's a deep dive session, right? You don't have to, but if you would like to, then just take a picture of this page, and you can then just ask me a bit more about it, and I can let you know. For being on this call, you do get, it's a 25,000 Naira training, but you do get it for 15,000 because you were on this call today. All right, so that's something that is great. So Atomic Habits, yes, thank you. The name of the book is Atomic Habits. All right, so that's basically all that we were going to be talking about today. I do hope that you have learned something. If you have any question at this time, please let me know what your questions are. So if you have questions, please let me know, and then we can tackle your questions for another few minutes, and then we can end the session. So if you have a question, please let me know. No questions? That's good. If there's a question, you may just type it in the comment section and I will pick it up. Oh, Jemima, please go ahead. So that's if you want to pay between now and Friday, you can make payment for 15,000 Naira for the session. If not, then honestly, that's absolutely fine. But I'm sure that you've gained a lot today. Jemima, let me unmute your mic. Okay, please go ahead, Jemima, and ask your question. Jemima, you can unmute now. School bus services. What do you mean? What's my view on school bus services? I have many different views. It is a profit. It can be a cost center. It can be a profit center. It can be a cost center that is. It can be a loss. You know, it can be a source of loss. So all it is that it's a cost center, but there are some other services that might be dependent on a school bus service. So for example, if your location is such that it's not accessible and 50% of the population or the inquiries you get ask for a school bus and want to commit if you have a school bus, then obviously the viability of your school as an institution, as a business, is dependent on your school bus. You know, for me, for example, we have a huge population of our percentage on school bus in the afternoon, but not in the mornings. So that's why we broke it up. You can either do one way or you can do two ways, right? So that's something, that's the thing about school bus, right? Okay. And if you registered for this and I have your email address, I would actually send you this recording of the session. But if you didn't register via email, then you will not get the recorded version. Yeah. So yeah, so that's what school bus is about. Is there any other question about school bus? Did I answer your question? Is Jemima still here? No, I think network has run from. Okay, Jemima is still here. Okay, so Jemima, did that answer your question? Okay, she says yes. All right. Any other questions? Fantastic. Thank you so much. Do we have any other questions? Thank you. None? Okay, fantastic. Thank you all so much for spending your Sunday with us. It's amazing having you here, and I really enjoyed having this conversation with you. Like I said, if you did register by email, I will send the link, the video, the recorded session to you, so that you can have it and you can watch it again. Thank you all so much for being here.